on BNN.
There we go. Our next guest says Europe is still driving the big market butts, and he expects the region's debt crisis will be fixed. Darren Farwell is Senior Wealth Advisor at Farwell Wealth Management. Good to have you with us.
Hello.
You're more of a glass is half full kind of guy? You think they're going to get this all fixed?
Well, as Dennis Gartman says, what can't continue won't.
Right.
And we know the situation as it is now can't. We hear people from Europe. We're starting to hear some positive signs. Merkel likened what's going on with the U.S. debt crisis right now, with the Euro debt crisis, sort of like a marathon, and he feel they're much closer to the end than the beginning.
Well, you touched on the U.S. there. Let's talk about the U.S. jobs data, the Canadian jobs data, because those were the key points today. A little bit worse than expected here, a little bit better than expected there, but do you really actually take any credence in the unemployment rate in the U.S. falling?
Falling? Unemployment rate in the U.S. falling? I mean, what we see is private sector growth in the United States being actually reasonably strong. This is the fourth month in a row that we've seen private sector growth gains in the United States, and today 140,000 announced. So this is very positive. It's like the U.S. story is sort of behind the curtain of this theater that's going on in Europe. And that's a good story, what's going on in the United States.
So you're not concerned about the unemployment rate falling to what, 8.6%, being people are just going, hey, you know what, I'm not going to find work anyway, I'm just going to go back to watching Oprah reruns.
Right, there certainly is some of that going on. But you would expect at this point in the cycle for the government to let jobs go, and they are. But we are seeing private sector job growth consistently, and that's the thing to watch for, because we need the private sector to hire and invest for long-term growth. That'll be the sign that we're really off to the races here, and it seems like it's coming.
Santa Claus rally?
Santa Claus rally, absolutely. Very convinced that we're going to see a Santa Claus rally, because we're seeing other good numbers. Companies in the United States are making a lot of money. For the first time in 6 decades, the corporate profits in the United States represent 13% of Q3 GDP. That's a big number. Companies are healthy.
A little coal in the stockings of Mr. Lazaridis and Balsley over at Research in Motion, though?
Yeah, I don't know what to say about that. We'd love to see that company do better. We need some execution. We had some numbers out of Scotia Capital that says their net tangible book value is $13.20. If you add in Nortel Patents, maybe it's $14.68. We're not trading too far off of net tangible book value, but really, bottom line is we need to see some execution for that company for anyone to believe in the stock.
Is this a short seller's opportunity here? I'm being told it isn't.
Short selling is very risky. We're getting on the game quite late. I would say I'd be a little bit reluctant to be a short seller right here.
Does this company even exist a year from now?
I'd suggest the company does exist a year from now. Whether management would be the same is the big question.
So you don't expect a takeover with somebody taking advantage of the stock trading 17 some odd dollars?
My understanding is the stock is really in very few hands, and it'd be difficult to do a takeover without them being quite on side, and it's hard to imagine them agreeing to take over. I think it would be a change in management before we had a takeover.
Now you do own shares of RIM.
I do own shares of RIM. I thought it was quite wise buying it a little bit higher than it is today, only to be proven that sometimes even the experts don't get it quite right.
All right, so then at what point has your patience worn thin enough that you would hit the sell button?
I'm not, because I really believe it's a question of execution. If they can execute through the first quarter of 2012, I think the stock could do a lot of very positive things. So it's about execution. It's really not about valuation. As I said, if you looked at net tangible book value, you'd say the stock, everyone should buy it. We need execution. I'm going to give them the benefit of the doubt and see whether we can execute through the early parts of next year.
All right, so on execution, what you're really talking about, I can imagine here, is updating that playbook in the first quarter as promised, the QNX handsets as well.
Exactly.
And if those two things don't come to fruition?
If there's big delays, if they come out and the product doesn't do what it's supposed to do, then it'd be time to give up on the stock, in my opinion.
Fingers crossed. In the meantime, Potash Corporation, under pressure today, but another play you really do like a lot.
Well, we generally like the commodity space. I mean, in one of two cases, we think it's going to be time to jump on those higher growth commodity stocks. One, this whole thing falls apart before it gets better and we get back into bear market territory, and you can afford to buy stuff that's really on stale. The second time you might buy is when we get a credible plan out of Europe where the world goes, yeah, we like that, let's move forward. Either one of those times you'll want to sort of jump on some growth stocks. Potash is in that category. Having said that, we're seeing a lot of selling coming out of Russia, and the crops have been good this year. So there's a little less demand on the fertilizer side than there have. We'd like names like Teck, we move on to that name a little more quickly. In the United States, Cliffs Resources, those are the kind of names we'd go to first.
Right? There in the green room, you were sitting next to an RCMP officer, so you know that
I saw him coming in.
We're going to be talking a little later on about counterfeit Viagra. You like the real thing, the company anyway.
The company, yes. Pfizer is a company with a very nice dividend. It's got a nice chart. Stocks are moving higher. They've refocused their business. They've already cut the expenses. Looks very good. And there's a drug coming off patent, but I think it's a Lipitor coming off patent. But they believe they're going to retain 40% of the market share. So we really like that company.
It's a brand recognition to a degree.
Yeah, you love those global brand name companies.
Tell me about the 4% dividend yield. Is it safe there, that 20-cent regular distribution in a slowing macro environment?
Yeah, that 4% distribution I haven't even heard that as a question. So, we feel quite confident they're going to be able to maintain that dividend.
All right, and I left the best for last, and I say that only because they're my boss.
Yes.
BCE, the parent of Business News Network through Bell Media. Why do you like them over TELUS or Rogers? Because I'm hearing those two players are actually pretty sweet opportunities as well.
And you might be getting a little bit bored of me saying this, because each time I've come on, I've said we have liked Bell. And what's happened, of course, is the stock has moved up consistently through the last few months. And that's why we like it. I mean, this stock has just proven consistently to move higher and higher, and you get a nice dividend. So we really like it to 42.50. We're going to look at it and say, how much further is there? But in the meantime, you get the 5% dividend, and that's another 5% from here. So there's a nice 10% rate of return. We'll take that in a well-managed company with a consistent track record of actually stock prices going up.
Well, Darren, great having you with us as always. Thank you.
Thank you.
Darren Farwell, Senior Wealth Advisor at the Farwell Wealth Management. I did it again. For further market analysis, join us tonight on Market Call tonight, 7 o'clock Eastern, 4 o'clock Pacific. Jeff Parent will be here. He's Portfolio Manager at Quadrex and taking your calls on technical analysis. Always got a head start by sending us an email to marketcall@bnn.ca. If you miss any of the top picks on either Market Call or Market Call tonight, we can send them right to your inbox, bnn.ca/subscribe for the nightly newsletter, and complimentary Marty Say's commentary on the market-moving stories as well. A recap on the markets and a detailed look at the day's top stories as I change my lips and get a new set when we come back.
During the Lexus December to Remember event, you can drive the